Hey everybody, thanks for showing up today to our new trade video. I'm just gonna speaking generally on the routine that I typically go through when I'm trading. And this is my paper money account on Thinkorswim, just so that way you guys know. And typically my process changes based on how much time I actually have. So I usually have a 15-minute version, a 30-minute version, and a 45-minute version on what my routine looks like. And the 15-minute routine is my minimum viable trading day. And so this is for busier days. I'm not scanning. I'm not trying to find brand new ideas. I'm just checking open positions and just market conditions and a few priority tickers only. And I would say the normal trading day would be about 30 minutes. And I would check the market pulse, manage open trades, look at my watch list, and build a trade if I see something clean. The 45-minute routine is the full version, and that's when I allow myself to really dive deep and allow myself to scan. But even then, I try to keep things tight. So one scan would be like a maximum of about 10 results. Um, then I pick about one to three candidates for an actual chart review. So I'm going to go through my watch list very briefly, just so that way you guys can see what I'm looking at. Like I said, this is the paper money account. So of course, everything is bought with virtual currency, fake money for the account, but this is what I have in the watch list so far. And I keep things small because the reason why I do this is that more time does not automatically mean better trading, right? So more tools, more tickers to watch, they don't automatically mean that you're going to make better decisions or better trades. So the goal is to use the fewest amount of tools needed to make a clear decision and save time. So I'll talk a little bit more about the market context that I'll do, uh, or I guess the check that I'll do for market context. Great place to start is SPY, which is an ETF. This is how it's been looking. I'll change it to the day so I can see how it's been moving. I'll change it to the month. Another quick check I'll do is on another ticker called QQQ. It's another ETF. Okay. And the third one I'll do is a symbol called VIX, another ETF that I follow frequently. The week is showing a very interesting story here. Let's see for the month. Okay. So before I even care about an individual stock, I want to know what environment I'm trading in. I check the economic calendar. I look at SPY and QQQ. I check VIX. If I'm looking pre-market, I'll also check ES and NQ futures. And it's not a complicated macro analysis. I'm just trying to answer one question, which is what is the overall market helping my trade? Is it hurting my trade, or is it creating a lot of noise? Um, so yeah, my VIX rule is pretty simple. If let's say VIX is under 20, I treat that as more of a normal environment. If VIX is over 20, I reduce the size. And if VIX is over 30, I consider sitting out for the day. And that doesn't mean that there are no opportunities. It just means that the environment is more volatile. And so I just have to respect that. And as a trader, you learn to not crash against the waves like that. Um, so I'll talk a little bit more about my open positions. Let's see if I have a few. Yep, these are my current positions. After market context, I check these, and this comes before hunting for new trades. Because protecting your capital is more important than funding the next idea. For each open position, I ask, is my stop still valid? Is my target still valid? Has any news changed the thesis for any of these companies? And am I still following the original plan, or am I just adjusting on the fly, or are my emotions a part of the equation? So I'll click onto one example so you guys can see. If the trade is working, I don't want to micromanage it for no reason. If the trade is invalidated, I don't want to negotiate with it. My rule is that, technical invalidation means to exit. So, best to cut the leg off if it's still bleeding, if it's bleeding out a lot, as an example, if the if that keeps me from averaging down, um, it could turn a planned trade into, an exit. So I'll go back to the open positions that I have. Let's check Tesla. And once my open trades are handled, I move to the watch list. It's like this is good. Let's get back to the watch list. So on a normal day, I'm not doing broad scans. I'm reviewing tickers I already care about. For each ticker, I'm looking at the daily chart first, and then the daily gives me the bigger trend. Um, it gives me the structure, it gives me the major support or the resistance, right? And let's move this daily chart. Let's see if we can move this to the day. So sometimes if I really want to do a deeper chart analysis, I'll go to a site. So we're gonna play around with this chart here. I know it looks like a lot, but you can also zoom in, make it a lot easier for you. Click on the 1 day. Best thing to do here usually is just to observe. Um, on a normal day, the daily just tells me the story. So you just look at the past 4 hours. You see the rise, the fall, the rise, the fall. You see that it's going up here, and it seems to have found a new level. down there. So when I'm confirming a chart, I'm not looking for a perfect setup. I'm just looking for a clear setup. So is the daily trend clear? Um, let's look at McDonald's. Or let's choose popular one. Let's choose Ford. Yep. So we look at the daily trend. Is the daily trend clear? Is the support and the resistance obvious? Does RSI support the thesis? Um, what are the 50 EMA and the 200 EMA showing us, right? When we have our indicators on here. I'm not gonna throw them on here, but just look at the chart in different ways through different filters. Look at volume. Just confirm if the volume is confirming your move. If you have a candle formation, you could zoom out and try to make sense of it. And most importantly, you just have to think of what would be the smartest entry point, what would be a good stop, and what's your target. So once you have that, you have your exit strategy, and that honestly saved you from a lot of bad trades. Having this quick setup to look at the technical analysis filters out a lot of bad trades. So if I can see an entry, but I can't really define when I want to get out of something, I don't even trade it. I just keep watching it. If I can define a stop, but the target doesn't give me at least a 2-to-1 reward, then you don't really have a trade. If you're chasing a big move, you want to make sure everything is set up the right way. So the trade has to be clear before you enter. So every setup I get, I give it a green, a yellow, or a red just to evaluate the trade based on a good, better, best type of system. And let's look at NVIDIA. For a setup to be green, the market context can't really oppose the trade. The setup has to be clear on the daily and on the 1 hour to 4 hour levels. So entry has to be very well defined here, especially for a trade like this. Stop has to be defined. Target has to be, like I said, at least a 2-to-1 reward to risk ratio. I would give this a yellow, and yellow means just wait, reduce the size, or you could use a tool like this and set up an alert. So if you know that you would like to set up an alert on NVIDIA, you think it's going to go up, go ahead and set up a reminder. I'm not logged in, of course, but you get the idea. You can also do this on Thinkorswim as well. I think Thinkorswim has better alerts. Um, for the time being, I'll show you guys a red, something I think is a red. Looks like they're making me log in. Sorry. Yeah. Back to my video. Very sorry for that. We have to keep the corporate sponsors happy. But let's look at Palantir. To me, this is a red. Red means no trade. Do not approach. Do not collect $200. Just keep observing if you can, but the daily will show you what you need to see. Um, if it's a big move, I definitely think that you should evaluate things through setting up alerts, looking at the chart formations, like I said, having your own system really helps, and just journal what exactly was your strategy if you were to go to a trade like this, right? So before I place a trade, I I have a journal that I write down the ticker, the direction that it was going in, the strategy behind it, what was the trigger event for the entry, like what was the price, and what's the stop loss. The target for this to enter this, honestly I wouldn't know, but if I had to guess, a good point would probably be between 137, 139, 138, 139, sorry. Probably it could possibly go to 140 within the next couple of months, but again, when you look at this long term, it's been pretty volatile. So you just need to know what you're doing and have your own system. If it's not a green or a yellow or a red flag, have another way of giving yourself the recommendation, but it just needs to answer the questions on what is my stop, what is my target, what's the reward to risk, and is there a confirmation on what candle I'm looking at? If this is a head and shoulders, things like that. So my risk rules are non-negotiable. I don't want to debate risk while I am emotional, if that makes sense. If I really want a trade to go through and it's just not, it's better to just leave your emotions out of it. This is a very risky game if you don't have your own rules to trade by. So my risk per trade is about 45 to $100. So with the minimum reward to risk ratio being 2 to 1, I limit my open trades to about two for the day. And if I'm trading options, I'm usually trading just one contract. I use my limit orders for entry, and I use stop orders for any invalidated level to protect. Um, so I don't enter on anticipation or hype, and I don't really average down on an idea that might have been slightly broken. So the point of it is to avoid losses completely. Losses are a part, but losses are a part of trading. So just keep that in mind. The point is to make sure that one bad idea doesn't turn into several bad ideas um back to back, right? So let's just check in the options chain on a stock. Let's look into Boeing here. Okay. Hold on. So this is another tool that I use, Yahoo Finance. So if we're trading options, I have a separate options check. I verify the bid, which is what you're buying at, the ask. So the bid and ask spread here, the volume, the open interest that's in there, and the delta. For options, Thinkorswim is usually my source of truth, but you can also use Yahoo Finance, like I said. So the big thing here is trying to find liquidity. If the options liquidity is poor, like this one, then it's usually not a good options trade. So I won't make a trade on the options here for Boeing, but I'll show you guys my system in the next video. It's going to be the journal, and it just allows you to be able to just write down and record your ideas as you're trading, and it just allows you to ask, did I follow my own rules? Did my setup work? Did my setup cause a mistake, or did I overtrade? And if there's any rule that needs to be clarified, then you get to refine your system as it goes. But it's just important to have that uh, because keep in mind you'll look at a number of trades, you'll look at all the different factors like reward to risk and your average that's realized. You'll have an idea of what a good setup looks like, what the best one looks like, what the worst one looks like, and you just continue to iterate it over time. So I'll show you guys that journal in the next video and how I use AI in my workflow, not for trade signals, but just for final trade decisions, how I use it. And it's not verifying live prices. I use Thinkorswim or Yahoo Finance for that. But instead it's basically it's giving me a trading assistant after I provide all the data that it needs. And yeah, it'll help you review the trade log that you make in the journals that you have. It'll summarize the patterns and it'll just help you clarify some of your rules. And if you stay true to your rules, just using it as a thinking partner has helped me a lot more, especially now when I have to go through the 15-minute routine. Um, and I don't have much time throughout the day, right? So that is my trading process. Just to recap, I'll check the market context on Thinkorswim. Um, I'll manage my open positions. I'll review my watch list. I'll confirm the charts. The daily charts help out a lot. Um, I'll label a setup like a green, yellow, or red. Build the trade card. Look at the risk, and most importantly, log the outcome. The biggest thing that the system does for me is slow me down. So it just reminds me that one clean setup is enough, and no setup is also a valid, you know, strategy and an outcome. So just protect your capital. Follow the rules, and you should be good. The video, I just want to provide this video as just an educational uh, and a planning piece of content for people that are trading out there. It's not financial advice. Just wanted to share that trading does involve risk. Everyone needs their own plan, but if you want more videos like this, I am going to break down my trade card, my watch list review, and my weekly review process in a few separate videos. So thanks for watching.